Okay, so if we look at the headlines on the 18th of May 2021, this is headlines I get off of the Forex Live website. Adam Button, who's a quite well known speaker on Forex, he's the leader of this team, and he's got a few guys, a handful of guys that work for him who post headlines in various sessions. So 18th of May, 1:39 GMT is the Asian session. So when I get up in the morning, when I'm in South Africa, I'm in GMT +2, I have a look at the headlines that happen throughout the Asian session and I look to see if there's anything that catches my eye. This one caught my eye, so I've copied and pasted it for you. Cable has hit its highest since late February, testing 1.4170. GBP is higher for the session year, alongside higher for the FX against the US dollar also, which means the euro and the AUD and the other forexes are higher against the US dollar. US dollar has dropped. Gold is also up. Silver is up. Silver, sorry. Asian stocks index, you can see it's in the Asian session, is also up. Okay, so when I see that something has hit its highest, you don't buy. You know what? You can lose out on it going higher, but when I see something has hit its highest, I breathe very slowly. I take a look at everything that's going on in the charts. I look to see if it is possible for it to go higher, but I would say I don't buy when it's hit its highest because the chances of it going higher is slim compared to the chances of dropping. And trading is all about risk assessment. What are the chances? Okay, so if something is at its highest, the chances that it's going to go higher is much lower than the chances it's going to go down. And from a risk assessment point of view, I've just decided personally that I'm not going to risk something that's got a very low possibility. So I'm very careful when I see a headline saying that something has reached its highest. I check those moving averages, and if they're not right on top of one another to indicate that it can go up further, and I am going to explain moving averages to you, I don't buy. In fact, I might look to sell. Okay. Next headline I saw on Forex Live. Risk keeps in a good spot ahead of European trading. So after the Asian session comes the European session. The European session, sometimes it starts, the Europeans come on board 6 a.m. GMT +2. Sometimes they only make a real move at 7:30 or 8 or 9 or even 10. So you've got to watch the moving averages to see when they're going to make their move. Okay. It says Nasdaq futures are pulling up. Now remember I said earlier, not going to do anything until the FOMC minutes have been released. So even though they're telling me that the risk is in a good spot, I'm waiting for the FOMC minutes. I'm not tempted at all. Because you know why? Because of experience, because I've lost money already by being tempted by this sort of headline. FOMC minutes are only going to be released the next day. This is the 18th of May. The minutes come out the 19th of May. I'm just going to watch on the 18th of May as to what's going on. Okay. So these guys, no matter what news feed you look at, I also watch FX Street news feed. Um, it's for interest and for just to keep up to date with what's happening. These guys are just telling you what's happening. They're not telling you what is going to happen. The guys and the girls, the ladies who want to tell you what is going to happen, I don't really pay much attention to. I look at my charts, I look at my moving averages, and my moving averages is everybody else's, but I don't really pay any attention to posts that come up saying, oh, there's a bull rally and the price is going to fly up. I pay no attention. I looked at these guys that post things to tell me what is happening, and I make my own decisions on what I know is still got to happen, and some other things that might be happening in the news that they're not talking about, like what is happening with the virus and the vaccines and all that sort of thing. Okay. Then I go and have a look at the economic calendar for the day of the 18th of May. Okay, so this says it's Tuesday, 18th of May to Thursday, 20th of May. I've just taken a snippet of the 18th of May on what has already happened. Okay, so sorry about that, it's my dogs. So 8 a.m. GMT plus 2, some releases for the pound came out. And yeah, Forex Live posted that the jobless claims were actually a bit worse than what was expected, which would indicate that the pound will go down. But you know what? Wait, because the pound's not necessarily going to go down. Um, what else did it say? Yeah, the employment change was higher than expected, so that's a good thing. Pound could go up. But remember, it's already hit its highest since February. Our unemployment has gone down, which is also a good thing. So, yeah, that's looking all right. So now I have a look at that headline, and I haven't made any decisions yet. Don't make hasty decisions, but I go and have a look what's happening on the pound now. Okay. Now I drive the analysts crazy because I look at the 2 minute chart. They think I'm a nutcase. Okay, but you know what? I do use the 2 minute chart. I don't use it without checking the 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, 1 day. You've got to check them all. I use the 2 minute chart to gauge what is happening right now. But you've got to have a look at the higher charts as well. Okay, so if we're looking here now on the 18th of May, 8 a.m. GMT plus 2, which what makes it 7 a.m. or 6 a.m. in the UK. You can see when the economic indicators were released, the price climbed a little. Okay, so now we're sitting on the 200-minute moving average, the red line. Now, any platform allows you to insert moving average lines. Okay, so whatever platform you use, you just need to find out how to insert moving average lines. So now the 2 minute touched the 200-minute moving average. It pulled up. The pink line is the 14-hour moving average. The grey line just above that is the 35-hour. The blue line just above that is the 50-hour, and the browny yellow line above that is the 100-hour. So what do I use? I use a 100-hour moving average. It's a simple moving average. You get different types of moving averages. Then I've got the 50-hour moving average, the 35-hour moving average, the 14-hour, and the 200-hour. Okay. On the minute charts, I think that, yeah, it's probably hours. It's not minutes, it's hours. So when you select your moving averages to insert on your charts, those are the ones I use. Okay, so it's 8 a.m., GMT plus 2, when those economic indicators were released. So yeah, 8 a.m., I'm circling. The price jumped a tiny little bit. Okay. 5 minute chart, see this 200-hour moving average is a bit low. Okay, so the purpose of the moving averages for our sort of maybe, immature point of view is that it's got to pull it up. The price can't go higher if you've got a moving average hanging at the bottom. So although it's pulled up the 2 minute, it's trying to pull up the 2 minute moving average, it hasn't actually hit the 100-hour moving average on the 5 minute. And it had been going down before the economic indicators were released. Are you with me? Now, I know I promised you Nasdaq futures, but Nasdaq futures don't really move that much in at this time of day, so I'm watching the GBP for now. That's the 5 minutes. Now I've just jumped to the 4 hours. What is it happening? You see, there, where that Forex Live said that the price has hit the highest since February. There it is on the 4 hour chart. So that's a 4 hour candle. Now that's where it hits its highest since February. You can see it went above here, above this price that was in May. February is way over here. We haven't got it on this chart. So obviously the price has been lower all the way along, and now he told us it hit the highest since February. Now I'm a bit wary, okay? Although these moving averages look fantastic, because you've got the 200, 100, 50, 35, 14-hour. Look how it's pulled it out there. It looks great. It looks like it's really aligned to start putting everything up. But I'm not so convinced when I looked at the 5-minute chart. I must have gone to look at the 15-minute as well to see what was happening. These ones, when I took here's the 1 hour. Okay, you can see it's been struggling now for a while. So the 4 hour won't show you this struggle. But if you look at the 1 hour, you'll see it started struggling to push higher. Okay. Even though the moving averages look beautiful, because if the 200 is above the 100, chances are the price is going to drop. So this does look beautiful, but I'm not convinced. So let's see if we can find a higher time. Oh, I started with the US Tech then on the 4 hours. Okay, so lesson here for me was I don't really care that the stats were not that bad, the economic indicators, because the price hit its highest. The 5-minute 200 hour is a bit low for me. I would have wanted it to hit down there, and then I might have been a little more convinced it's going to pull it up. So I'm not going to do anything with GBP. Okay. Then I jump and I start watching and as you can see on the 1 hour, the GBP, even after the economic indicator was released, oh yes, we saw on the 5 minute, it did pull down a little bit. So now it is pushing up, but yeah, not for me. Not if it's hit its highest since February. I'm not buying at the high. You buy at the low, preferably. Okay, now we go to US Tech. US Tech is Nasdaq futures on this platform. Okay, now if you have a look here, April, we've got April. Quite a while ago, a month and a half ago. Okay, it started climbing very nicely to the 14th of April. If you opened a buy down here, you could have made a nice lot of money. This is from the end of March. You can see it's just before the April line, climbing till the 14th of April. Then it started indecision. And what was probably happening here is the guys were a bit worried. When I say guys, I mean men and women, investors, but worried about inflation, but worried about the coronavirus variants that were threatening. India started suffering terribly at some stage. I think it was around here. Price dropped right back. Look at this, May. It dropped right back to the beginning of April. So if you'd have opened a buy end of March, by the 14th of May, you would have been back at the same price. You would have made no money unless you closed here at a high, which was over 14,000. It was a record high for Nasdaq futures. Okay, so shame. Whoever opened at record high on a buy could easily have been wiped out here. If they had a stop loss, if they opened a buy here and put a stop loss very close here so that if the price went down, it would minimize their losses, then that's okay. And that's why you must always put a stop loss in. So now the price fell heavily here, back to almost the same price as April, beginning of April. And you must remember there's also that that saying that says sell in May and go away. So yeah, you can be a bit wary in May, but there's also never been a May in the last 100 years that has been recovering from a pandemic. So I'm not sure if I'm taking the sell in May and go away expression very seriously, considering it's the first time in 100 years that we're in a May recovering from pandemic. Okay, so now I'm back here at the GBP, and this is now 20 past 8. So at 8 a.m. they released. Okay, it is going up, but it still hasn't hit the high of the Asian session. Okay, so it's still bonking, bungee jumping there on that 1 hour, because that's the 2-minute chart. It's not the slow chart. Okay, so it's still bouncing up and down there on the 1 hour chart. Go back to US Tech, also 8:30. I think this is 2 minutes. It's pulling. Sorry, I cut it off there, but I'm pretty sure 2 minutes. So these are useless to us because I cut the blinking time zone off. We could perhaps identify here. Looks like the 2 minutes if you look at the time spaces between here. Okay, so yeah, you can see again, pound is bouncing. It's not able to pull up higher than what it was. Okay, then a notification came in on email. I'm not showing who it was from. Don't have their permission. It says bullish surge continues across global markets. So I've said, yeah, I just received a notification telling me there's a bullish surge in stock markets. I'm ignoring it. US markets normally go down after such a notification. Shame. I don't want to be ugly to them or anything, but it's a fact. Again, it's you get a notification like that, just be careful. When you get the notification, it normally means it's over. So unless you've got a squawk box, which is like an app that you pay quite a lot of money for, it's like, I don't want to lie, but it's like around like $1,000 a month. You've got to pay for this app. It's a squawk box and it gives you notifications the second that something starts happening. An email notification or a pop-up notification tells you has happened. It doesn't tell you when it starts happening. So if you don't have a hell of a lot of money and you want to trade, you you can't afford a squawk box, then I'm trying to show you what the other ways are of doing it. Okay. And squawk box notifications are also not always correct. They come with huge indemnities, to say that they don't take any responsibility for anything they say. If they let you know that they believe that, for example, the silver price is going up and it goes down, they don't take any responsibility. So a squawk box is not the beginning and end of a successful trading career. I can, yeah, guarantee you that, and they will also say that because they know your markets. Nobody can say, nobody can say, not even the best traders. The banks get it wrong as well, but they've got enough money to make the stop loss very low, so that they can go into huge losses, but they don't close the trade because they've got enough capital to carry that loss until the price goes back up again, even if they just break even. So they can afford to be wrong. But if they are right 70% of the time, it makes a lot of money for them. So they can afford to be wrong 30% of the time. Smaller traders, can't really afford that because 31 trade that falls within the 30% of losses, if you're only just starting out, can cause you such a loss that you won't really have the capital to invest decently into a trade that does make you money. Okay, so just be careful of notifications and headlines. This was another headline that came through, GBP USD forecast. Now, I'm very careful here. Sterling on course to hit 3-year highs, defying overbought conditions. I don't really take that seriously until I've confirmed it for myself with the economic indicators coming through, the what's happening with the virus. Boris Johnson is starting to indicate that he is concerned about the variant from India, and if he needs to stop reopening, he will. And so I'm not going to fall for that headline yet before confirming it for myself. Okay, so here we see it's still jumping up and down. So that's an hour later. We look at 8 o'clock. Yes, it went up a little, but trust me, this is not a lot on a 2-minute chart. And this is still the 2-minute chart. You can see by the variable here Because if you had to open a buy here, your buy price would have probably been up here because the spread. So you would have not even been sitting on a profit yet. So I'm not too sure about that. And then we're 23 minutes later. It's trying, but it's not reached the high price yet. Okay, let's see. US Tech, oh, Nasdaq's going up. You see, okay, this is the big down that I showed you just now, the big fall. It's pulling, but it's only the 18th of May. I'm waiting for the FOMC minutes. I wouldn't be surprised if it doesn't go all the way back down again before the FOMC minutes and then pull all the way up again. But I'm not even sure of that, so let's wait and see. 2 minutes US Tech, you see these moving averages are falling. They're low. Because on a 2 minute, these should be right on top of each other if they're going to pull up. Are you with me? So it's definitely going to track down again. They're getting too wide apart. This is a pound 2 minute. Also quite low. These moving averages are quite low. But I've got other reasons to wait for that too. Now the odd USD, this is a 2 minute chart at 9:30 a.m. 18th of May GMT plus 2. This odd USD, oh, I have to be careful here, but very often follows what the Nasdaq does. In fact, it follows what US indices do. And the reason for that is because in this day and age, when the US dollar declines, the indices can go up because they know they can still then borrow money. It's more the interest rate than what it is the dollar. If they're sure that the interest rate is going to stay low, then they'll buy shares, which is all sitting in the index, okay? Then they'll buy shares because they know they can lend money very cheaply and grow their businesses and make a better profit. And then the US dollar normally declines, which means the odd can go up. So there has been a time when the indices has gone up in the US and the Australian dollar has plunged. So you can't just take it guaranteed that when indices go up, the odds are going to go up. You need to watch the economic indicators, sometimes the politics, and of course, in the case of the virus and the lockdowns and all that sort of thing, you've got to know what's going on in the world to be able to say for sure if the order is going to follow the indices. Then I'm just showing you the euro here. The euro is doing very nicely. My trading platforms, my profitability earnings per pip is not very high on the euro. USD, it's much higher on the old GBP. So the euro is not a bad currency to play because even though your profit margin is lower, your loss margin is also lower. So if you do make a wrong decision, your loss margin might be, it's bearable for your budget, but it's not going to make you as much profit as the higher risk currencies, which is the pound and the Australian dollar, and I'm sure there's others. But the spreads will also be higher than that. For example, the US dollar, South African rand, the spreads are huge. You buy USD ZAR at when the price is 14.1, you almost have to pay 14.8 for it. You've got to wait 6 weeks just to pay for the spread. I'm exaggerating a little bit, but you get my drift. Okay, so now I'm looking at it's 9:30 a.m. So I went to have a look. What are the next economic indicators to be released? Now, my personal view is that when the FOMC minute date is cropping up, the other economic indicators of other countries are not really market movers. Sometimes they are, but most currencies and indices rely on the USA. For me, it's quite annoying, but I do understand it from an historical point of view and from where the US is the largest economy in the world and so on. but it can be a bit frustrating when you're trading, because sometimes the investors in the US, they invest differently. You might be convinced that the economic indicator has now shown, hooray, hooray, you got to buy, and then they sell. They sell to a 200-hour moving average on a 4-hour chart, and then they buy again 3, 4 hours later, and in the process they wipe you out. So you've just got to be very careful. Okay, so we now see that the euro. This is Italy. That's the Italian flag. This is the Eurozone. It's these little blocks here indicate the importance of the statistic that's going to be released. So the gross domestic product at 11 a.m. GMT plus 2, heavy importance for the euro and how it's going to perform. Okay, because if it's a good indicator, if their GDP exceeds the estimates and the expectations, the euro will go up. Okay. Okay, the pound, we're still bouncing, And this is now already 10 a.m., 2 hours later after the release. And it's my belief it has something to do with the FOMC minutes coming up on the 19th, but it could also be waiting for the 11 a.m. GMT plus 2 euro data. Okay, now we see the Nasdaq. It was pulling up nicely just now, and I said the 5 minute looked a bit low to me. And there we go, it's starting to pull down. Then pushing the 5 minute down further. So those headlines that said that the bull run in stocks and it's back coming with a bang, that's the headline I showed you earlier, that I said it's probably going to go down now. That is what's happening. So just a reminder to be careful. Okay, so here's the hour chart for the pound. It's struggling a little bit, but it has in fact broken. It's gone higher. So it's reached another record high, but it's not a heck of a lot higher than where it was, because it was 1.418. It's now 1.420. So it probably wouldn't have even reached your opening price, your spread, by now. It hasn't gone up by much, even though it did make another record high. If you'd have bought way down here, perfect. Then you could have made a lot of money. But that was long before the Asian session even. That was the day before on the 17th at 12:30. Okay. It started going up in the Asian session. Okay, US tick, and yeah, it would have been sorry, just to show you here, the moving average. Look at this on the hour chart. Look how close it was to the 200 hour. So now the purpose is go down to pull it up. So it's pulled the 200 hour up to there. In my personal opinion, and I might be wrong, hasn't pulled it up by much. Okay? That's just my view. I might be wrong. But it did, yeah, it was a nice clear. So yeah, it was pulling. It was jumping, yeah, you see. It was jumping here on the 16th of May. Jumping to pull this 200 hour up. You see how it pulled it up? Okay? Then it went up, took a final dip to pull that 200 hour up. Do you see it? But in my view, it hasn't pulled it up very far. Okay, US Tech 1 hour is going down, which could be an indication, because they sometimes, like I said earlier, the dollar works together with the index. The dollar is going to work together with the pound. So if the Nasdaq 1 hour chart is going down, and I said earlier, I don't trust the highest since February, this is indicating that the chances are this is also going to go down, because very often the pound, not so much the euro, the pound and the Australian dollar, the high risk currencies follow the Nasdaq. Okay. Okay, that's enough for this session. I will see you in video 3. Thank you so much.